Get to a couple of banks then. Canara Bank, that's the next management on the show. The asset quality was the best in 37 quarters. The net interest income, though, came in at 8-quarter lows. To help us out with what's the way ahead, we have with us Mr. Raju, the MD and CEO of the bank. Hi, sir. Good morning. And wishing you as well as your entire team at the bank a very, very happy Diwali in advance. And hoping the second half of the year as well shapes up well for you. Well, I'm looking at the numbers, sir, both in terms of your advances as well as deposit growth. Both of them have come down. They are at multi-quarter lows. The scramble for deposits we knew. I think the last time you joined us, you were talking about the loan growth being in that vicinity of around 11 to around 12%. What's the loan growth for this year likely to be at? Point number one. And point number two says there's a scramble for deposits. How does it impact your NIMs? Will you hold on to that 2.93% odd mark?
Regarding, let me say first the credit growth. The credit growth, if you see that sequentially the second quarter, our credit growth is near to the 4% in the quarter on quarter. That's almost 3.78% we have grown. Even in the RAM credit, we have grown in the quarter on quarter 4.5%. The first quarter of this month, this year, and the last quarter of the last financial year. These 2 quarters earlier also I shared with you that we have shed our low yielding advances and we have withdrawn the sanctions and we have taken it back almost 35 to 40,000 crores. That is reflecting in the year-on-year growth of 9.54%. But otherwise, this quarter and whatever the exercise we want to do it in the previous 2 quarters, we already completed. This credit growth in the first time I have seen that last 8 quarters, the credit growth is touching the 4% in 1 quarter, that too from the September quarter. It is a slightly slack season. We definitely, what we have given the guidance of 10% credit growth, and I shared with you twice, so we are expecting that our credit growth will be around 11%. Still I stick to that, our credit growth will be 11% around. And regarding the deposits, for garnering the deposits, I didn't see any problem for the public sector banks, like even for the Canara Bank. Last quarter, if you see that we have grown almost more than 11%. At this quarter, we have got that 9.34% that deposit growth. Last continuously 3 quarters, we are growing incremental deposit and the credit growth are at par at the same pace. The another reason why it is that this quarter it has come down below 10% is you might have remembered that the 666 scheme we have introduced 2 years back and which are coming for the renewals now. We are successful in renewing all those deposits in the 95 to 96%, but some 3 to 4% may go out of the system because of there is avenues are there. That's the only reason. Otherwise, we don't find. And the last 18 months, we have not altered our deposit rate. That shows that we are very much confident in garnering the deposits. But our main focus again continuing in the retail term deposits as well as the CASA deposit. CASA deposit, if you look at that, SB Savings Bank individual, the first time for last 3 quarters, our CASA percentage has increased 29 basis points. We are in June we were 30.98. Now we have improved to 31.27. And in absolute numbers also, Savings Bank account itself, in a year on year, it is almost 18,000 crores we have improved. And the quarter on quarter also in absolute numbers 8,000 crores we improved. So we don't see too much problem for garnering, but there is a pressure on interest expenses.
Got it. So we just wanted to get those 2 points out of the way. Now, gold as a percentage of your total mix, I think the last time we charted was around 15%. And it appears there is traction on that particular vertical. Could you tell us what has been the gold loan growth? If you could tell us what percentage of your book it is? Where do you see it headed? And how is that portfolio growing?
Yes, sir. The last 3 years in the gold loan portfolio, we used to grow around 25 to 31%. But when we are reached that our portfolio has crossed 1.5 lakh crore, we thought that we have to take some precautionary because we are I can say that the industry leader in the gold loan portfolio in India. So we have taken several steps. Where we have discontinued certain things in the metropolitan cities. We are not lending against the gold against agriculture purposes. We have discontinued our interest subvention for these things in all the branches. And we have strengthened our assessments and all, because once we have crossed that portfolio is 1,50,000. And to compensate this in the metropolitan cities, we have launched a retail product at a much higher pricing and a much lower LTV ratio. Our average LTV ratio in the gold loan portfolio is around 66.73, which is much below than the regulator expectation of 75 to 80%, even including if you the agriculture. That shows that, but now because of these decisions, our growth has come down from 25 to 30% to 17%. We expect that the 15% growth will continue in the gold loan, which we are aiming only the 15%. We don't want to grow only in this 30% here. That we are very much confident. And the retail product, what we have...
No, I got that. We got that. We have many topics to cover, sir. So sorry, apologies for butting in. Good morning, Prashant here. On credit costs, right? That is where I think you've shown through. Slippages are lower quarter on quarter. Net credit costs are lower on a quarter on quarter basis. How should we read this? Because is this, can it remain at these levels, in your opinion? So if you look, for example, look at SMA2 loans, that has gone up. They are about 1.1% of loans as compared to 0.4% of loans Q on Q. So that will need watching as well. So just give us some guidance on asset quality from here out.
First, let me talk about the NPAs, then I'll come back to that SMA. The NPAs, the percentage, because the recoveries and the slippages we could control very much in the current quarter. First time we have touched only 1% of slippage. And our slippages in absolute numbers also, it was only 2,300 crores. As against that, recoveries and upgradation has crossed 3,500 crores. That has given a cushion to us on improving our asset quality ratios. So you look at that just in one quarter, in the gross NPAs, we have reduced from 4.14% to 3.73%. NPA also we reduced from 1.24 to 0.99. Our provision coverage ratio also from 89 to almost 91. This we could do because the last 2 years, whatever the decisions we have taken in the underwriting standards have improved, that is giving the benefit now here afterwards. Now let us come to that SMA2, what you are told. In actual purposes, SMA0, SMA1, SMA2 are all much below than the June quarter, but only in two accounts. Last time also I shared with the media that one of the central PSU steel industry, that is an exposure is reflecting in the SMA2, and one state government irrigation project, which is also reflecting from SMA2 to, it is oscillating between SMA2, SMA1, SMA0. As on date, that exposure, the state government guaranteed exposure has come down to SMA1. But we don't see too much concern on these two. These two exposures are more, total together is more than 6,000 crores. If I remove that, I will be below that the June quarter. But these two, I am not seeing a too much concern. But of course, for the safety, for the central PSU, we already provided 15% provision. And the state government, whatever the guaranteed is there, we don't see any threat in slippages.
Okay. So not seeing any sort of further concern on slippages. Mr. Raju, I noticed, when you're talking about the credit offtake this quarter at least, retail has grown very fast for you. I think corporate is about 6-7%. Retail is growing in double digits, well over 20-25%. Is this going to continue? And how much of this is secured, unsecured? What is the proportion of unsecured that you have? I'm sure it'll be small as percentage of your overall book. But your thoughts on the unsecured part, and also if you could just break up the loan growth target for the whole year into how much will come from corporate and how much would be retail?
So retail, we are not so active in the unsecured loan portfolio, madam. Out of 1,95,000 crores, our portfolio is only 18,000 crores unsecured. Out of that, actually we give unsecured loans only to our existing customers who are all salaried class and pensioners. We don't give to other than salaried class and pensioners. That together we have exposure around 13,000 crores. And the remaining 5,000 crores is unsecured educational loan. I don't see any slippages in this because we are very conservative in sanctioning of unsecured loans. So the slippages in this is less than 1%. Even as on date, outstanding also is less than 1%. But the second point is retail growth. We have seen a robust growth. That's why just before when I was talking with Prashant, I told that about the gold, that we have introduced, we have discontinued in metropolitan lending against for the agriculture purpose for gold loan product. To compensate that, we introduced a retail product for meeting the requirements of the metropolitan branches, the loans against customers. Loans against the gold. That product has kicked very well, and it is showing a robust growth on that. That is helping us in retail growth much than. Otherwise, our housing loan is growing around 13%. We expect that will continue. Our vehicle loan is growing at 16%. That also will continue. Regarding the corporate, actually we are growing in the double digit only, but because of our reaching in the last quarter and the previous quarter, that is reflecting is at 7%. But if you look at that the quarter on quarter, it's almost 3% growth is there in this quarter also. I will see that the 3% growth for the next 2 quarters also. Overall, though what we say that the 11% credit growth, the corporate may grow at 9 to 10%, and our RAM credit will grow at 12 to 13%.
All right, sir, got that. Thank you very much. Wish you festive greetings once again, and thank you very much for joining us this morning. That's Canara Bank at the end of the second quarter. Quickly.